The U.S. market sell-off deepened on Friday as President Donald Trump threatened to impose new tariffs on China over the coronavirus crisis, compounding fears about a looming recession. Trump's threat pulled attention back to the trade war between the world's two largest economies, which have kept investors on the edge of their seat for nearly 2 years. The S&P 500 index fell by 2.8% on Friday to close at 2,830.71. For the week, it posted a 0.2% loss. With nearly half of the S&P 500 companies having reported results so far, analysts expect a 12.7% fall in profits for the first quarter and an even sharper decline of 37.8% for the current quarter. Still, aggressive stimulus measures and hopes of reopening the economy from virus-induced curbs have helped the S&P 500 index to post its best months in 33 years in April. Meanwhile, the Dow dropped by 2.5% on Friday to finish at 23,723. The index logged a 0.2% dip on a weekly basis. According to market observers, a rise in tension between China and the United States certainly could have a negative impact on the U.S. economy and business confidence, which is already hurt due to shutdowns. Investors are also nervous after grim U.S. manufacturing data underlined the extent of the economic damage. U.S. manufacturing activity plunged to an 11-year low in April, supporting experts' views the U.S. economy was sinking deeper into recession. In the meantime, the NASDAQ Composite plunged by 3.2% on Friday to end the week at 8,604.95. The tech-heavy index posted a 0.3% fall from previous Friday's close. Among stocks, Apple Incorporated fell by 1.5% after Chief Executive Officer Tim Cook said it was impossible to forecast overall results for the current quarter because of uncertainty created by the virus. The tech giant's shares ended down at $289.07 on Friday. Still, Apple posted a 2.1% rise for the past week. Though Apple easily topped March quarter earnings and revenue expectations, it did not provide a forecast for the June quarter. The iPhone maker on Monday this week borrowed $8.5 billion with a four-part bond deal, adding its name to U.S. investment-grade companies borrowing a record amount of debt in the corporate bond market during the pandemic. The stock was trading in the green following the announcement. Among other stocks in focus, United Airlines Holdings Incorporated plunged by 9.6% after posting a first quarter loss of $1.7 billion. The airline holding company's stock fell by 10% by the end of Friday's session to $26.62. For the week, it still posted a 4.1% rise. However, it continues trading in the red this week. United Airlines Holding Incorporated will cut at least 30% of its managerial and administrative jobs in October, or about 3,500 positions. The cutbacks are the latest indication that there will be mass job losses in the U.S. airline industry. You're watching US Stock Market Weekly Review on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.